and I was there 10 years ago. I started in 2010 with MPP, and I worked there for about 8 years. And then I moved over to another creditor insurance program within the other guys. And then a couple of years ago, moved over to Hub, where I learned of a great opportunity with the online site that you see, the Better Mortgage Insurance Program. And then from there, Rosie and I created our company, BMI Advisory. And now we're rolling out this program throughout the mortgage broker world. So it's been fantastic. And it's, I've been working creditor insurance since 2010. And, I always promoted that, and having insurance is important. It's good to have. And mortgage brokers only had creditor insurance. So it's not the greatest product, but it was something that was available to the client that they were able to get coverage quickly. And it was something. Working with my territory at MPP was British Columbia. And, over and over, I hear brokers saying how they don't like creditor insurance. They want term insurance. It's never been an option in the past to have a term insurance program available. And a couple of years back, Assumption Life created the Better Mortgage Insurance Program, where a client could purchase insurance end to end on their own without an actual life insurance agent being involved. So that was pretty much the gateway that we were looking for to be able to have mortgage broker involvement, where you guys have clients that you're seeing every day closing on a huge purchase, their home, and it's an opportunity to get them coverage. So it's a great marriage between that Assumption Life program and the mortgage broker space to be able to offer this product. With that, we've kind of had our company evolve from not only being able to have the mortgage brokers offer the Better Mortgage Insurance Program, but then being able to do a whole view for the client of their insurance needs and take a look at their specific situations. So that is something I do want to touch base on a little bit later. But yeah, so that's what I've been up to in the insurance world for the last 10 or 11 years. And back in 2017, I'll never forget the date, April 1st, 2017. That was the day FICOM changed my world anyway, where creditor insurance was no longer going to be made available as it had in the past to mortgage brokers. They had certain rules come into play where the lender had to play a role in that process. And that devastated anyone who did do credit insurance sales in the past. So fortunately, again, this program is a welcome addition to lots of brokers in BC to have that opportunity so that a client can get coverage. And one of the things that I do really want to highlight with you is that even though this program is called Better Mortgage Insurance, it is not mortgage insurance. It is level term insurance. So that's an important thing to understand. I still have conversations with clients today where they think that it's still a mortgage type of insurance. So I do reiterate that no, this is individually owned. It's individually underwritten. So they are naming the beneficiary. That's the person who will receive the funds. It will not go to a lender directly. So that is comforting from their perspective, because creditor insurance itself, like I say, it was great that mortgage brokers had the opportunity to have it. And it's been a great product up to this point. So now we just have something that, as the name says, it is better mortgage insurance. And I believe everyone here on the session has had referrals coming into us and has navigated through the site. So I don't know if you want me to go through that at all, or just highlight different things about the product itself.
Maybe a little bit of yeah, like the product details, because I think everyone has seen the videos that I've done. Oh, and by the way, I sent the videos to Jessey. So Jessey, just to put you on the spot, how did how did the videos look? Were they useful at all?
They are fantastic. I want to tell, so Liz does most of the insurance referrals from White House. I do some of them as well. But basically every once in a while I get a call from her saying, hey, I don't think the broker understands this concept so much. So it's like, okay, we'll set up some training and do something with them. But now I've got my easy out and just say, yeah, just send these videos because they are fantastic. They break everything down. It's crystal clear. And I just have to put my face on yours and then I'm just going to use it.
No way, man. That's my channel.
Exactly. All good.
So I think we've got a sense of how to get the quote done. We can get how to get the application to the clients. I think some of the questions that the brokers have had, perhaps the one that has been most common, is how do we find out about the details of the product?
Yeah. Okay. So there are a couple of things, like right on the website, there is the ability to get details about the program. So I'm just going to come in here and prepare a quote. I'm just hitting a bunch of spots here, and 25-year term, we'll do 500,000, just anything to pull up a quote. And then when you're here, you basically have the entire product information at your fingertips. So again, you know what this is to send the email out. One thing I do want to touch base on this, because we've had some confusion in the past with other brokers. And when I was watching your video, I didn't hear you say anything about this specifically, but some brokers send this email to themselves. And that sometimes causes some conflict when the client takes that link. So if you send it to yourself first, and then you forward that email to the client, that sometimes causes some conflict with being able to access the system when the client actually goes in to try to replace that original email with the one for the client. And I apologize, there's this thing beeping here. If I knew how to shut it off, I would. But
so Jessey, so what you're saying is this pop-up that comes up when you do the quote, if you send it to yourself, I think the issue becomes that if you try to get the client to follow up, and then they enter the quote number, they also have to enter their email address. And if the two don't match, it's not going to work.
Exactly. Yeah, you get the screen that says oops or whatever it is. So again,
someone's really persistent in trying to call you.
It's my daughter's friend. They're trying to do a call with her. So
like Facebook kids, and they just keep calling.
Messenger kids, yeah.
Oh my God.
Give me a second. I'm just gonna go throw this in her room. So 1 second. Sorry.
No problem. I'll carry on. Okay, so so if you guys, this is a pretty interesting point, and certainly I think as part of this process, as part of doing the insurance quote, sometimes we can kind of get to this point where we see this pop up and we see this and we say, oh, I'm just going to send it to myself so I can send it to the client. The difficulty is that, again, if you want to carry this quote on, the client enters their email and it won't jive. It'll say this doesn't match our records, so it won't carry on. So make sure that if you're going to use this pop-up, you have to send it to the client. I just say nix the pop-up, close it off, and then carry on, and you can always send it to the client later.
Right. Yeah, exactly. So if you come in afterwards and prepare a new quote, you'll get that pop-up. Or if you do close out that box like I just did here, at the bottom of the screen, you can click email quote, and that'll pull up that pop-up box again that you can send this one off. But I was coming here to show you the product details. So up here, it has quote and then product details. So if we switch that over, it has the 3 different products and all of the details about the program. So life insurance, it's called Flex Term. And one thing that everyone I think needs to understand is if you were a life insurance agent and you were licensed with Assumption Life, this is a product that you have access to. It's a term insurance product, level term. As an insurance agent in our system, it's called Flex Term. On the consumer site where it's available to consumers to purchase, it's called branded as Better Mortgage Insurance, but it is the exact same product and program. So I just wanted to highlight that. So it has all the details about, some of the underwriting components. And because of COVID, it's actually helped the insurance industry quite a bit because it was very antiquated. Everything was done on paper application forms and everything was meeting face to face. And then a nurse would have to come out. But because of COVID, all the insurance companies increased their limits on a paper application or an online application compared to when a nurse would have to come out and see a client. So for example, here you can see that life insurance, if the client is between 18 and 45 years of age, they can apply for up to $999,000 without the nurse needing to come see them and draw blood, etc. Now, Assumption Life has about a 10% rate where they randomly select clients to have the nurse go out and see them. So they kind of have a system in place where they just randomly select. But this kind of gives you those guidelines. So if you have a 60-year-old client, they can apply for just under $250,000 without the nurse having to come see them. So if it is something where they don't like needles or anything like that, whether these details or not, or again, you could refer them to us and we'll talk to the client and go over these details with them. But it's something that it is at your fingertips.
Hey, Jessey, if we happen to send you a referral for a 60-year-old and we send it through as a $250,000 policy, will you and Liz pick up on the fact that you could just drop it by $1 and perhaps go non-medical on it?
So that would kind of depend on the conversations with the client. There are benefits. So, and I think it's right here, like there's pricing bands is what they call it. So at $250,000, it's actually cheaper to buy $250,000 of coverage than it is to buy $249,999. So from that end, usually the client would prefer to have the cheaper premium at $250 and just have the nurse come out and see them, and they have someone to talk to for a bit. So, but if during our conversation, if they're saying that, yeah, like they don't like needles, don't like any of that stuff, we'll definitely take a look at this and say, hey, well, if you drop it down to $249, then the nurse won't come out. There's a 10% chance that you'll still be randomly selected, but there's a good chance you won't. If they're adamant that they do not want a nurse to come out, we do have access to other products and programs. So we'd be able to go to a no medical program and provide coverage to the client that way. So yeah, so this, the other thing I'd mentioned is the issue age is between 18 and age 70. This coverage goes up until age 85. So if a client is age 70, they can apply for a 15-year term, which would take coverage all the way up to age 85. They could no longer be applying for a 20 or a 25 or 30-year term at that age. So that's the other thing to kind of notice, is that you may have indicated on your system that you're doing a 25-year amortization, but after you've typed in the birth date, you don't have an option for 25 years. You only see 15 or 20. That's because of the aging component of the client being able to apply for what they're eligible for based on their age. So you may have seen that in the past. Maximum amount of coverage is $4 million. And they've got all the details in here. The product is convertible into permanent insurance. So that's a nice feature that some clients do utilize. Permanent insurance does cost quite a bit more, but it has its own set of benefits and features. And primarily, term insurance is designed for a specific period of time, generally automatically renewable and convertible. And that's what this product and program is. But if the client is looking for permanent coverage, they want coverage in the future, no matter when they die, that they have that coverage, or they're looking at it from an investment perspective, permanent insurance is the way to go. But because it's outside of the Better Mortgage Insurance Program, that's where we as life agents, Elizabeth and I, are going to be talking to the client and having discussion outside of this type of program, if that's what the client is looking for. So I wanted to highlight that. But basically, you've got all the details here. The disability coverage, again, just talking about issue ages up to age 60. It does terminate at age 65. So that's why there's a shorter period of time. Minimum amount of coverage for disability is $300 per month, or maximum is 1% of what the amount of life insurance is, or 1.5%, I should say, and up to a maximum of $3,500. If you have a client that wants disability only, using box 2 and referring that client to us, we have the ability to go to other insurers. And there's another insurer that we primarily go to, which is Industrial Alliance, who they have a great program for creditor type of disability. And what creditor type disability basically means is they owe money on something like a mortgage payment. So there's that type of coverage versus based on your income. So we can have those discussions with clients on whether they're looking for income disability coverage or whether it's the creditor coverage as well. So that Industrial Alliance program also goes up to a $5,000 maximum amount per month, as opposed to the $3,500 on this program.
Hey, Jesse, so I noticed that you've got, so on, after we've done the quote, you can get the details on this section. Is there any place that these product details are listed out, or do you have PDFs of these, or is there some way to get this info so that we could potentially pass it to a client?
Yeah, for sure. There are PDFs that are available to us as life insurance agents. So I can go onto the system, pull those out and send them to you that you could refer to.
Yeah, if you could, I think it would be really valuable for certain clients that ask that particular, if they're looking for the details of the product, at least we can kind of get the quote done and then we can send them the details of the product. And then, of course, we'll have them have the conversations with you. But it's just nice to have that. I know that's been one question that's been asked a little bit, is the details of this. So that's
right. Fantastic. Yeah, perfect. So yeah, so we'll definitely do that. I'll take note of that here.
And I think one of the other things that Jesse said during that part is really, really important, which is that while we have like through White House Insurance and through Jesse at BMI, we have these three things. We've got the life, the disability, and the critical illness that we can layer on top. But the clients aren't limited to these three things. I've actually seen Jesse just did a group benefits quote for a company that one of these clients owns that we did a mortgage for. And like, that's completely a whole different thing. So again, those are things that we can get paid for if Jesse places that insurance. So anyway, just wanted to let you guys know that we're not bound to just these three things, but there's a whole bunch of opportunities that can open up from this.
Yeah, and speaking of that, I did kind of document a couple of things. So yeah, you mentioned the benefits. So employer benefits is something that we can do, as well as sometimes someone just wants individual health and dental benefits. So we can do that as well for your clients. And recently we've been doing quite a bit in terms of RESPs. So if you know someone who has children and they are wanting to have an RESP, we have a really good program. It's called the Diploma Program. And the way I position that one with the clients is that the kid has to go to school, graduate to grade 12 and go to university. Well, the parents also have homework to do. And with this program, they have to maintain monthly contributions into the RESP until December of the year that the child turns 17. And if they do that, there's a bonus of up to 15% of the contributions that have been made that get added to the RESP. So yeah, so that's a really good program. So obviously, if it's a newborn or a much younger child, there's much more opportunity to be able to get a large bonus of like $6,000 or $7,000 added to that RESP once they've turned 18. So it's a really good program. So yeah, so when we talk to clients about that, we definitely talk to them about that program.
So that's through
And
the government matching program.
so yeah, so the government adds
Up to 20.
20% as a grant, but that's they get that. And in BC at age 6, they're entitled to a $1,200 grant that seems to be only available in BC. I haven't seen it in other provinces. And then on top of that, there's a 15% contribution that could be added if the parents do their part of continuing those monthly payments. And so yeah, so it's really good. It's a really good program, and they could, I believe, do as little as $25 a month, up to the maximum to get the maximum contribution from the government is $208 per month per child. So yeah, so that's exciting stuff too. So there are other products and programs. So basically, if we can sell it as a life insurance agent, then you can get comped on it as well.
So Jessey, can I turn over to the brokers with any questions they might have for you? Because I think we've covered the important parts, which is finding out the product details, what other things we have available. But if anyone has any questions, can we turn it over to them?
Yeah, absolutely.
And would you mind unsharing so we can see all the
Perfect.
folks? There we are.
I have a question, Jessey.
Yes.
When you have two people applying for a mortgage with the insurance, is it better to do singles on each one, or is it better to do joint? And if you do a joint, how does the life and the disability work? Is
Okay.
it first to die claims the life policy?
That's right. Yeah, exactly. So to answer your first question in terms of what's better, it's ultimately our preference is that the clients have individual policies. And the main reason for that is on a joint policy, it is joint first to die. And then that means that the surviving spouse no longer has coverage. So they've been paying premiums for 10, 15 years, but now they have nothing. On individual policies, they still have that policy. And there is a bit of a discount for having it as a joint. It comes out to 8% of what the premium is. So when I talk to clients, I definitely say that paying the extra 8% is well worth it, having your own separate policies. Because, heaven forbid, if both were to pass away at the same time, so car accident, for example, if you have a $500,000 joint first to die policy, 500,000 is what would get paid out. Each person would be half of what's there. So each one would get 250 to their beneficiaries. If they each had a $500,000 policy, 1 million is being paid out, 500,000 to each of their beneficiaries. And it only was 8% more in that scenario per month than it is to have the joint policy. Okay. So I always recommend that. If ultimately finance is what's the breaking point for them, I would either talk to them about lowering the amount of coverage so that they could still have their own. But ultimately, if they want a joint policy, we'll do that. I just need to make sure they understand it's joint first to die. On the disability side of things, they do have their own disability products or policies. So from that end, it's not a first to whatever. They each have their own. So yeah. So and that 8%.
So on that, they don't qualify for half of the amount each. They each, like if the disability is 2,500, it's either one of them.
So in that case, so if on the application form, if they're both taking disability, it would be for each person to have $2,500 of disability coverage. Yeah.
Okay.
Perfect.
Jessey,
great question.
Does that answer your question, Kathy?
Yes, it does.
Okay.
Thank you.
Sorry. I had another question, which is if the clients are too old to get coverage, how do we provide something other than having the clients check the third box, which is that they're waiving coverage, because it actually says on the referral form that they should see the estimate.
Right, yeah. So basically, if there isn't that opportunity to see the estimate, by going to box 2, as in referring to Liz and myself, then we'll be able to have a conversation with the client and see what options are available. The online system is available with a 15-year term up to a 35-year term. As life insurance agents, we have access to a 10-year term. So someone can apply for a 10-year term under the age of 75. So we do have up to age 75 that we can offer coverage. So there are some alternatives that we can play around with, but it does mean switching it over from a box 1 to box 2.
Okay.
And that opens up the door to everything that we have access to.
All right. So if there is interest there, then at least we can provide them with a touch point, or if they just want to waive it, then that's fine too.
Right. Yeah, exactly.
Okay, good. Any other questions? All right, I think we've covered a lot. This is always so information intensive that I think that probably kind of gets us to where we wanted to be. Jessey, thanks so much for your time today. If anyone wants to get a hold of you or get a hold of, well, let's get a hold of you, and then Liz's info is on the site. But if they want to get a hold of you, how do we get a hold of you?
So you can send an email to me directly or to the website or to the email address that we have for White House, which is whitehouse@bmiadvisory.ca. And my phone number is 604-761-1552. So you can definitely reach out to me if you have any questions, or email me, and I'm happy to help.
Awesome. So we're going to carry on with our broker meeting. Jessey, I'm sure you got to deal with your child's Facebook Messenger.
Yeah, crazy stuff.
So thank you again for your time, and I'm sure we'll be sending more. I think like we're starting to get a hang of it, so I think there's going to be more and more apps coming your way. So thanks for all your hard work, and let us know what we can do to help improve.
Sounds good. Thank you. Take care.
Okay.
We'll see you.
Thanks,
See you, Jessey.
Jessey.
Bye.